Welcome back to Waffle Ladders. Let me ask you something. If there were a number attached to your name, a number that influenced your loans, your job prospects, your insurance rates, your visibility online, would you want to see it? Or would you rather not know? Today we're asking, are we already living in a soft social credit system? Not a dystopian government scoreboard, just something quieter, more corporate, more fragmented, more normal, but still creepy.
Dad?
Yeah?
Why did my bank app just congratulate me for improved behavior stability?
But you've been upgraded.
I didn't apply for anything.
You didn't have to. And that's what we're covering today. Let's climb the ladder. Number 10, your credit score, the template. The original life rating, 3 digits, built from payment history, debt load, credit length, new inquiries. Basically, are you a trustworthy person to lend money to? And it will determine your mortgage rate, your car loan approval and rate, which can be as high as 30% if you don't score well. Apartment approvals, will they let you in the building? Sometimes job eligibility. You are financially summarized, condensed into a number. It's not who you are, it's what you are, statistically.
That feels a bit aggressive.
Yes, it's black or white, in or out. That's the way it is. Number 9, your rideshare rating. You know this one. You get an Uber or a Lyft, and afterwards you give the driver a rating. And then the drivers rate passengers. You don't get to see that score. It's on the down low. You only get to see your total composite score, an average of all the drivers. The individual score is anonymous. Did they hate your clothes? Were they prejudiced? Did they have a bad day? You'll never know. But guess what? It affects you. How? If it drops low enough, drivers can decline you. No appeal process, just friction. And you without a ride.
So it's Yelp, but for your personality and maybe your skin color?
Exactly. Your own personal score for sitting in a car.
Damn, maybe I shouldn't have slammed the door.
Probably not. Number 8, resume scoring algorithms. Didn't get that interview call? Might not have anything to do with you. Just a machine that didn't think you met the cut. Before a human sees your job application, an algorithm likely scored it. Commercial software like Greenhouse, Mocha HR, and Workable are all examples. They offer major AI modules to parse and screen submitted resumes based on keywords, formatting, employment gaps, experience patterns, even your grammar. Obviously your years of experience. You may never know why you were filtered out. You just receive silence. Rejection without explanation. The modern courtesy. Number 7, social media distribution ranking, not censorship. Ranking from platforms measure engagement speed. How fast do people click on you? The watch time, the duration of engagement. Believe it or not, this is measured in the thousandths of a second. How about comment quality? Thoughtful or brief or rude? Interaction frequency. Hit rate for clicking as a percentage of total viewers. Then decide who sees you, how far you spread, whether your voice travels. 2 identical posts, 2 different fates. Because your invisible score differs.
So I'm not ignored, I'm deprioritized.
That sounds better, doesn't it?
No, it doesn't.
Okay. Number 6, insurance risk scores. Insurance companies don't see you. They see probabilities. They see risk. They see a number. They see your zip code, your purchase behavior, your driving patterns, credit indicators, your income and employment history. These are all fed into a predictive model. You might pay more because people statistically similar to you once did something reckless. You inherit the digital suspicion. I don't know if that's fair, but that's the way it is. Number 5, fraud scoring in banking. Everyone has experienced this. You swipe or tap your card, it comes back declined. Frustrating, right? But why does it happen? continuous evaluation. Every single transaction, from a small purchase to a large transfer, is evaluated in milliseconds. The score, an algorithm assigns a probability to the transaction, essentially giving it a fraud risk score. The threshold, if that assigned risk crosses a specific invisible to you threshold, the card or transaction is immediately frozen or declined. The impact, this action occurs without warning or explanation. As the documents state, you might be declined and unable to complete a simple task like buying gas because the algorithm felt uneasy. User experience. The process is entirely automated and happens in the background, leading to sudden, unexplained inconvenience for the user. The dialogue provides a relatable example where a seemingly benign purchase of protein powder and batteries was enough to make the bank system panic. Number 4, tiered customer status. This one is a little more obvious, but the impact is hidden to the average customer. Airlines, hotels, retail, they all play this game. Status levels. Silver, gold, platinum, diamond. You're not just a customer, you're stratified. What does that mean? For mere mortals, they just get the normal stuff and perks, but for the uber wealthy or those willing and able to power up, the perks rain on down. Faster support, better seats, more leniency, special entrances. This has even taken over theme parks, which include lightning lanes and VIP tours. Of course, if you're a normal plebe, you wait hours in line. That's not evil, it's optimized favoritism. Equal opportunity ends at the checkout. Number 3, dynamic pricing. You don't always see the same price as someone else. This is something that started with parking and HOV lanes. Then it was modified to other things. The difference? Everyone gets the same price for an HOV lane. Commercial products, not so much. Factors can include location. If you're in a high-income area, higher prices. The device type. If you have an Apple phone, you might pay more for certain things. Your purchase history. Have you overpaid before? Maybe a sucker. Demand signals. Oversupply. Price down. So you may be shown higher prices because data suggests you'll tolerate them. Same product, different reality.
So my phone thinks I'm desperate.
Yeah, your phone knows you're desperate.
That's fake news.
Number 2, behavioral advertising profiles. Targeted advertising is the name of the game now. Shotgun marketing is a waste of time and money. Drilling into specific groups is the efficient way to advertise. To do this, they need to group people into categories like a likely parent, a high spender, budget constrained. Are they fitness oriented? How about politically engaged, either left or right? Vegan, keto, all these things will matter. How do they do this? Not because you told them, because you hovered 1.8 seconds longer than average on that picture of a baby. You are reverse engineered, your interest inferred and sold. They don't need to know you. They just need to predict you. Number 1, the invisible composite version of you. Here's the part that gets darker. There is no single master score, but there are dozens of partial ones. A financial score, risk score, engagement score, fraud score, customer tier, ad desirability index. Different companies, different formulas, but all building a statistical shadow, a version of you made of probabilities. You never see it, but it influences what offers appear, what rates you receive, how much friction you encounter, how visible you are on your website or Twitter or X. You are not centrally judged. You are continuously assessed. And the most unsettling part, most of the time, the system is right.
Hey Dad.
Yeah?
I aggregated your known behaviors.
6.8 mid-tier human.
You gathered points for on-time bill pay, but you lost points for arguing with the chatbot.
That chatbot started it.
Flip the badge around. Likely to click accept all cookies.
I told you to leave that part out. Well, there you have it. Mid-tier human, What can I say? The truth is, we don't live in a single authoritarian scoring system, but we do live in a society built on ranking. Efficiency requires sorting. Sorting requires data. Data requires constant evaluation. And evaluation becomes influence. It's not a red stamp that says denied. It's subtle. Slightly higher rate, slightly longer wait, slightly less visibility, tiny adjustments at scale. You know what, if you learned something today, please consider subscribing and perhaps comment below on what you might have experienced. And as always, join us next week for something interesting and fun, and perhaps sarcastic. Until next time, keep climbing.
And in the morning, I'm making waffles.